So we've had a nice bounce off the lows, right? About 6% or so on the S&P 500. What now is the question. We give a little bit back today. Is this just another one of your run-of-the-mill bear bounces?
Yeah, I mean, I'm still very optimistic on where the markets are going. But the big thing going to be this week is, you're right, that inflation rate, right? Everybody's worried, is the inflation going to be peaking here? Are we going to see the Fed continue to raise rates? And I think likely we're going to be in this continuing interest rate raising environment. So some of your longer duration assets are likely going to continue to underperform. So yes, we're seeing this bounce in tech over the last week. I don't necessarily think that that's where you want to be chasing right now. That you want to still look at some of your cyclicals.
Okay, so we're going to get to that in a second. But this line that you just had, I'm still optimistic on the markets. Where does that optimism come from?
I think ultimately the economy is in a better place, and I think a lot of people give it credit for. I mean, we're the really strong labor force. Ultimately, wage growth is still going up. That's why people are able to sustain this inflation. I think as long as you have that, it is still theoretically possible to have a soft landing. I think we could continue to see things get on good footing. We just have to get through this. We have to see peak inflation, see people get through this. But so far, they've been able to.
Okay, so your view is not at all recession in the U.S.?
It's possible, right? I mean, I can't discount the fact that it's a possibility, but I don't think it's a foregone conclusion.
Yeah, but I mean, you can't have a very optimistic view of the stock market if you in turn think that we're going to have a recession.
Correct. I'm not of the mindset that we're in an impending recession. I'm not discounting the fact it's a possibility, but no, I am not of that mindset.
What about this idea that, so the economy is, it's not that bad off. And the Fed's not going to be as aggressive as people think either. So everybody's gotten too negative on everything, whether it's the economy, whether it's earnings or the Fed. You buy that?
Well, it's possible, right? And I think that's what the markets are pricing in. It's all that bad news is priced in. I think it's going to take, a much larger catalyst to bring the markets down a lot further. But there's really no good news getting priced in. You're starting to see things like commodity prices come down. Maybe we are starting to see peak inflation, and none of that good news is getting priced in.
So this idea that you mentioned, technology, okay, you don't think it can last, this little move that it's had? Because it has been a nice little run, and some of the mega cap technology names are the ones who have led it.
Which isn't that surprising, because they were also the things that dropped the furthest, right? So I think you're seeing that kind of relief rally here as things are coming in. But ultimately, if we continue to be in a rising rate environment, I think you want to continue to focus on, I guess, not jumping into some of those large tech names. And even, I think, especially looking at profitable companies. I think that's really important right now. You're actually seeing this huge discrepancy where your unprofitable companies are down by about 60% on average, whereas your profitable companies are only down about 18%.
Speaking of, I mean, what do you make of the ARC names, for example, that are up like 25% off of their lows, right? The first sort of to go down as hard as they did, and maybe the first to recover in any sort of meaningful way. Is that a signal of anything?
I think it's a short-term relief more than anything. Again, it could still have some room to run here, right? I mean, they have come down so far. The valuations are becoming very cheap right now. But I just think ultimately it's not the place that I would continue to chase. So
do you not think that earnings are going to be as bad as some people expect? And would you admit that expectations and the numbers at this point are simply too high? They've yet to really correct with the rest of the market.
Well, I think it depends on what market we're looking at, right? Because even like when you look at layoffs, that's in things like your tech firms. I think seeing some of our revisions in some of our tech firms, you're saying, yes, those are bouncing. I think we could see them there. But then you're seeing these other industries that are still having trouble hiring. They are still booming. So I don't think it's going to be across the board. Yes, I think there's going to be some revisions. If anything, I would probably argue that's going to be in tech.
What about as it relates to tech, FX, right? We're looking, I mean, as I see it now, we're waiting for this move to parity with the euro and the dollar. And I mean, it's basically there. It's not exactly there, but for all intents and purposes, it's there. And that is going to be a drag on earnings, especially for tech, no?
Well, especially your companies who are going to have your profits abroad. And that's where some things like your small caps can actually look attractive, where they're much more insulated in the U.S. But yes, that's definitely going to have a drag on earnings. So I think we're going to have to watch that as they start to report starting this week.